So it looks like I finally managed with a small delay. There were some technical challenges, but seems to be working now. So sorry to keep everybody waiting. Yeah, I will just give everybody a few minutes here to join. And I can see we are 10 more or less. Yeah, so I think I'll just get started. First of all, like I said, sorry for the delay. It was apparently like a technical issue. So I've been trying to log in and only manage now. I have some questions that I've already received on email, but of course I'm here for you. So if you have anything that you would like me to clarify in relation to limited companies, then today is a good day for that. You can write your questions in the comments for me. And in case I don't see any questions, then I will simply take the questions that I've received already. And the first question relates to company income tax. And of course, it relates to the rate that the limited companies pay. In general, I can say that limited companies, they pay 22% in company income tax of their profits. So it is naturally, you take the revenue, you deduct the costs, and the remaining amount is the profit, and the tax there is 22%. The next question relates to how much time it takes to incorporate a limited. In general, you should expect that it takes around, I'd say, 1 to 2 weeks. You can either use a service like we have, or you can go directly to a service like, for instance, legaldesk.dk that has an excellent incorporation service. And as I said, 1 to 2 weeks is to be expected for the whole incorporation process. The next question relates to dividends. When can I take a dividend? The question says here. And here it's important to note that, I don't know if you're familiar with the limited, but in general, a dividend is kind of the money that you pay to the shareholder after the year has ended. So first the company will generate a profit, then company income tax is paid, and then the remaining amount can be distributed to the shareholders if the company would like to do so. It's not mandatory, but if they want, they can. You're not allowed to distribute a dividend during the first fiscal year. So let's say you would start your company here, let's say 1st of October, and the first fiscal year would end in December 2022. Then it's not possible to distribute a dividend until the first year is finished and the annual report is finalized and the first annual general meeting is held. So yeah, so keep that in mind. It means basically for you that in the first fiscal year, you can only basically get a pay slip. So you can get your salary, but you cannot get a dividend. The next question relates to who can be a director of a limited. And in general, you can be a director as a resident of Denmark, but also as a non-resident. So it is not important if you hold a Danish passport or not. The same thing goes for the shareholders, that you do not have to be a Danish resident to own a limited. You can also be a shareholder as a non-resident. And I don't know if you guys have any questions. If you have, feel free to write it in the comments. Otherwise, I will just continue here with the next one I have on my mail here. It relates to a holding company. And the question basically is, should I make a holding company? And in relation to the holdings, it is naturally individual if it's a good idea or not. A holding company makes very good sense if you accumulate a big profit in your what we call the operational company. So if you put a holding company on top of the operational company, then it's possible for you to distribute the profits as dividends to the holding, thereby protecting the money from creditors and others in the operational company. So that's one really big reason to do that. When you pay a dividend from the operational company to the holding, then it's also tax-free. So it's a very easy way to get money to go from one company to another without having any tax consequences. The next question relates to, it's actually also for holding, and it is relating to if you can make a holding company after, meaning I assume that if it's a person that already has a limited company, can they then incorporate a holding company after they've done the operational company? And the answer to that is that yes, it's possible to do. You should consider that there is a risk that when you transfer the shares of the operational company to the holding, the risk is that you might get some tax imposed on that transaction if the tax office would deem that there would have been like a profit when you transferred the shares. So if you do it, let's say in the beginning of the company when there is no real value of the shares, then in general there is not any tax consequences by doing that. If you wait a longer time, and let's say that your operating company is successful and you have a good profit, then be careful incorporating the holding company and then just transferring the shares, because the tax office might say that you should pay tax on the profit that has occurred from the time where you incorporated the operational company to the day where you transferred the shares to the holding company. So of course, if the value is significant, then the tax also could potentially be significant. So I hope that covered this area. Here's a question about dividend tax, and I can see that Anna at least also maybe is interested in dividends. So I will try here and elaborate a little on that. So this question goes to how much is the dividend tax? And here you first have to consider who gets the dividend. So if we look at a very small company, let's say that we take an operational company, an ApS with only one shareholder, then that shareholder can receive a dividend, as I said, after the first fiscal year has ended, and if there is what we call free reserves, and the free reserves basically is accumulated profit in the company. When that dividend is distributed by the company, then the company will have to withhold a dividend tax if the shareholder is a person. That dividend tax is 27% if it's a Danish resident. There can be situation if it's a non-resident where the tax is different. Very often Denmark will have what's called a double taxation treaty with the other country where the shareholder resides in. And very often the withholding tax for dividend is 15%. That's described in the double taxation treaty. Even though the company withholds 27% for a resident shareholder, that's not the same as 27% will be the total dividend tax. In Denmark, we have kind of like a threshold that will jump from 27 to 42% once that threshold is exceeded. And the threshold change a little every year. What you should keep in mind is that it's typically around, at least at the moment, around 50, 55,000. Maybe it will change again next year. You can see the rates on our website. I can send a link to it later here. We have a very good blog that describes both the thresholds for the dividend tax, but also for other things like maximum tax brackets and so forth. If it is a company that receives the dividend, as I mentioned earlier, then if you have a structure where you have a holding company owning the operational company, then the dividend tax in general would be 0. So you can distribute the profit as dividend without paying any tax. That makes very good sense, as I also mentioned, if you want to protect a profit from potential claims or things like that. So keep that in mind also as a good option. And then finally, there is, in addition to the shareholder, where the shareholder is a person and where the shareholder is a holding company that owns all the company, then you can also have a situation where another company owns a small part of the company, and we call that for a portfolio share for that company. And the taxation there is a little different. The company will then pay a dividend tax on 70% of the dividend. So that's called portfolio share. So it's slightly different. And we've also described that on our blog if you're interested in that as well. So that was actually more or less the questions I had on my email. It was like a very quick walkthrough, especially since I was late today. So I don't know if there is anyone here that has other questions for me. If you have, then please write them in the comment section. I'll be happy to elaborate. I don't know if you, Anna, are still on, but you wrote something about dividend. Was my answer sufficient for you, or do you maybe have some other questions about dividend that you would like me to clarify? And also, of course, if anybody else has something, otherwise I will wrap this up for today. And I will also, in the comment here after the live stream, send you a link to the blog of the dividend tax. Oh, I have two questions here. Anna asks here about salary for ApS, and yeah, very relevant. So you can say that for an ApS, then, and I think what you assume here is salary for the shareholder. So a shareholder that is also the director can be, of course, hired on a normal payslip. I would recommend that even though you also own the ApS, then make sure that you make what is called a director's contract. You can download them online, or you can also find a director's contract on legaldesk.dk. They do charge a small fee for it, but it's always good to have. If you would like to get a payslip, then first of all, you need to make sure that the ApS is registered as an employer. That is done on virk.dk. Once the limited company is registered as an employer, then you also need to have a system that can do the payroll. And here we usually recommend, there's in Denmark two systems. That's the most common one. One is called Danløn. The other one is called Blue Garden. And I'll also put these in the comments afterwards if you're interested in them. Once you've registered as an employer and you've created the salary system, then you can do pay slips just like a normal employee. The tax that you pay on the salary will be your normal tax. So if you are a Danish resident, then your income would follow your normal tax percentage on your tax card. So you basically would go into Skatborger, you would self-assess how much salary you're going to get from the ApS, and then the tax office will adjust your tax percentage and your tax allowance. That information will go into the payroll software, and then you will get a normal pay slip like like a typical employee. And if Anna, if you're referring to salary for like employees that's not the shareholder and the director, then it basically operates in exactly the same way. Employer registration, salary system, employees needs to update their tax cards, and then they get a pay slip like everybody else. Then Marius here asks, I live in Denmark and I have an LLC in another country. The LLC pays taxes in the other country, but if I take dividends, do I still pay tax in Denmark? And if so, what percentage is that? So this here is quite interesting. It's especially interesting because if you live in Denmark, then you have to be very careful with a term that's called the seat of management. And basically what the term means, seat of management, is that a company needs to pay tax where the management is seated. So it means, Marius, that even if your LLC is in another country, then the Danish tax office will actually deem your other LLC as a taxpayer to Denmark just because you have residence in Denmark. So that's something that not many people are aware of, and you should definitely be careful with that. If the LLC has a profit in the other country and the LLC has paid tax in that country, then the double taxation treaty between Denmark and the country will describe how to handle the tax. Typically, Denmark will claim the tax here, and the other country will probably, I don't know what country it is, but will probably be allowed to take 15% in company income tax, and then you would need to pay the difference from what you've paid in the other country and to the tax that you're paying in Denmark, which is 22%. So let's just assume that the tax, whatever, is 18% in the other country. Then I don't know how it's been done now, but if they followed the double taxation treaty, then they would be allowed only to withhold 15%, and you would pay the difference in Denmark, which would be an additional 7%. So seat of management is something you definitely need to look into. To answer the question about the dividend, do you need to pay dividend tax in Denmark? And the answer to that is yes, you need to do that. And again, it will follow the double taxation treaty as well. because the other country might already have withheld some dividend tax before you got the dividend. So when you declare the dividend in Denmark, you're basically going to pay the difference between the dividend tax you paid in the other country. Most likely it will be 15%. That's a typical rate that is in the double taxation treaties. And then you would pay the difference up to either 27 or 45%, as 42%. I had the 45 in mind because at the moment, I don't know if you followed the media, but the government is seriously considering to change the dividend tax, the maximum bracket from 42 to 45%. So it's quite a lot. Yeah, so I hope that answered this question. Then Rades here also asked here, what are the capital costs from making an ApS? Is there a cheaper version? Well, in the past, there was a cheaper version. We had this company structure called IVS, but the government felt that it was very often used for like fraudulent activities, so they decided to discontinue the IVS. So at the moment, there is an ApS, which is kind of like the cheapest option if you want a limited. The capital requirement in Denmark, the minimum capital requirement is 40,000 Danish kroner, and that's the ApS. There is bigger versions of the limiteds like an AES, but typically one would start with an ApS simply because it's simple, relatively cheap. But as I said, there is a 40,000 Danish kroner capital requirement. Incorporation cost could also be relevant, of course. Typically, the incorporation cost is around €1,000 plus minus. You can find different solutions, like we have one. You can also find law firms that has it, but more or less that's going to be the cost. If you take a fully automated service like Legal Desk, then it's cheaper. You can do it yourself for around 2,000 kroner. But be aware that since this year is like an English-speaking community that we have here on this live, then most of these services is only in Danish. So if you are confident reading Danish, or if you are confident, Google translating documents, then it's perfectly fine. You can do that. And if you feel better getting help from a company like us or somebody else where you can get it, discuss, for instance, the articles of association or whatever document that you're not sure about, then I would recommend to pay a little more and then get the services that you need. I hope, Radis, that answered your question. Then we have Svitlana that asks here, can you give any advice for international importers? And I'm not really sure what that question relates to, but I think you mean that it's, I assume, a Danish limited company that needs to import from other countries, I think. So if that's the case, then what you would do is that you would set up the limited company like any other limited company. That would be a normal ApS typically. Then when you register the company, then it's important that that first you will get kind of like the incorporation done, so the company is registered. In addition to that, you need to go into Virk and add different sub-registrations. So there is, of course, the VAT, which more or less everybody needs. There is the case with Anna before, then she asked about salary. The employer registration is also a separate sub-registration. And then there is also import. So remember to always add VAT, employer, and import registration if you want that. Furthermore, if you are an importer, then be aware that if you receive some products that you need to return to your supplier, then it's actually considered export. So it's not enough just to have an import registration. If you could be in a situation where you also need to return some products, then you need to add an export registration again. And it's actually done on the same page on Virk. So it's just putting an extra mark in the box, and then it's done. So I would definitely recommend to do that at the same time. Other than that, when you are an importer, be aware that in addition to import taxes, we also have something called excise duties, which is relevant for some specific types of products, especially if you import from the European Union. Things like alcohol, like beer, wine, but also chocolate and nuts, plastic bags, glass bottles, stuff like that, all have separate excise duties that you need to register for. And that cannot be done on the same site where you register the import and export. It's a separate registration. So it's always a good idea to investigate the products that you want to import and figure out, first of all, are there any excise duties? It's only a few product groups that has that. And then, of course, if you import from European Union, then there is not any import tax per se, because import tax more concerns goods that come from outside European Union. If you import from outside European Union, then don't bother yourself doing the import, because you would need to understand a lot about tariffs for import tax, and it's simply not worth your time. Instead, contact a logistical company and they will make all these calculations for you, including calculating import tax and declaring it and so forth. So it's much, much easier. I hope that clarified your question. Otherwise, feel free to elaborate. Then Marius asked again here, thanks for that clarification. I need to look into the seat of management. I did not know about that. And then you say here the country is Romania and it is a tax of 3% on income plus 8% on dividends. So the way it would happen here is that if Romania only will charge you 8% in dividend tax, then you would need in Denmark to declare the dividend you've received. And then on your tax return, there is also a space where you can write how much tax you've already paid. Then when Denmark calculates the tax, then depending on the size of the dividend, then you will pay either 27 or 42%, and then you will get a discount on those 8% that you've already paid in dividend tax. So I hope that clarified, Marius, for you. Then Anna here asks, is it cheaper in taxes that the ApS pays the pension for the director, who is also an employee and a shareholder, or should the person makes his own pension as a private individual? Well, I guess that it's not that important per se. What needs to be considered here is, of course, the tax level of the person that is both the director and the shareholder. In general, if we speak about pension, then pension makes really good sense if you pay maximum tax, because the pension is kind of made to chop off the top of the income so that you can save some money on your tax, basically. If you just want to pay to a pension, because you expect to get old and would like to get some money, that's also good. But remember that when you get the pension paid out in the future, you also will have a tax obligation. So imagine a situation where you, for instance, pay to a pension in 2021, where you have a relatively low income, especially if it's a new company. I assume that a lot of these questions here is for new ApSs, and they don't generate that much money in the beginning. And it also means that the director very often is not paying maximum tax. And if you're not paying maximum tax, then try and imagine if you pay to a pension and the tax value of that payment to pension is actually relatively small, then you could be in a situation in the future when you actually retire that the tax that you'll be paying is higher than what you actually deducted when you got the pension. So a pension is not always a good idea. You need to consider if it makes sense from a tax strategic point of view. Another thing is that, and probably this one is the worst one, is that when you make a new company and you decide that you would like to get a pension, that's all good in the beginning at least. But what if something goes wrong and all of a sudden you're in big cash flow trouble? The company is going much worse than you expected and you just need money. The bank shut down the credit line. You're not able to get any credit. The supplier shut down the credit line. What can you do as the director and the shareholder? Not much than calling your pension and say that, oh, I paid 6 months of pension. I would like to cancel it because I need the cash. Once you cancel the pension, there is a penalty tax that's very, very high. And it will eat away more than half of your pension before you get it back on your bank account so you can put it into the company again. So that's also something with pension that you need to consider, at least in the beginning. If your ApS is doing well and you're consolidated, then of course it's fine. But just be aware that these pensions are not very flexible. Once you've paid, you're kind of stuck with it, unless you want to pay a very high penalty for actually withdrawing the pension again. So I would definitely be careful with that. That was for now the questions I have. I think I'll give everybody a chance to add a question if you have something. Otherwise, I think we covered a lot of ground here in these 25 minutes we've spoken. If anyone would need some additional help from us, it could be more questions you have, or maybe with accounting or incorporation, then I'll also put a link in the comment to my calendar, so you're free always to reach out. So I think I will stop the live stream for now. Thank you very much for participating. And again, I apologize for the delay. So yeah, but technical things happen. So at least for now, thank you for me. And it was a pleasure that you would join. Take care and bye.